Data travels the globe instantly, yet moving money across international borders still takes 1 to 5 business days as it bounces between a complex web of intermediary banks. This breakdown of payment inefficiencies highlights a specific drain on global liquidity: Nostro and Vostro accounts. Because transactions do not settle instantly, banks are forced to leave billions of dollars sitting idle in these pre-funded reserve accounts to ensure they facilitate foreign exchange trades. These are billions in trapped capital. Funds that could be invested or loaned are instead locked away to serve as a manual buffer for slow settlement. For the last 14 years, Ripple has been building blockchain infrastructure designed to replace this manual buffer with automated settlement. The traditional financial system remains tethered to these idle reserves and multi-day delays, requiring a shift in how settlement architecture is built from the ground up. While stablecoins promise to solve this liquidity issue, this market positioning table shows the landscape is highly top-heavy. Just 2 issuers, Tether and Circle, control roughly 90%. In December 2024, Ripple launched RLUSD, integrating a regulated stablecoin into its existing cross-border payment infrastructure. This token is backed 1-to-1 by US dollar deposits and treasuries. It is issued under a New York Department of Financial Services trust charter, with primary custody managed by BNY Mellon. This creates a unified stack. First, the XRP Ledger provides the underlying track, allowing transactions to settle in 3 to 5 seconds for an average fee of $0.0002. Second, on-demand liquidity instantly converts fiat to XRP to fiat, removing the need for pre-funded foreign accounts. Finally, RLUSD anchors the workflow, providing institutions a regulated dollar-pegged entry point, ensuring stable value during settlement. Combining these 3 elements into one workflow gives institutions the speed of blockchain settlement, without the regulatory risk or price volatility of unbacked assets. This integrated infrastructure led to a sharp acceleration in market adoption. This chart of RLUSD's market cap shows a steep upward trajectory. The token reached a $1 billion market cap in less than 120 days, surpassing several historical benchmarks for early-stage stablecoins. Usage has expanded to over $5 billion in monthly transfer volume, servicing more than 80 payout destinations worldwide. Large-scale organizations have already begun utilizing the system. Partnerships with entities like BlackRock and Deutsche Bank suggest the technology is meeting the standards required by major traditional finance players. The rapid rise of RLUSD indicates that institutional demand for these systems existed. It simply waited for a vehicle that operated within established regulatory frameworks. This adoption has shifted Ripple's revenue model. Instead of relying on token sales, the company generates recurring income through transaction fees and the interest yield from its stablecoin reserves. Protecting this revenue is a global licensing portfolio. This table verifies that Ripple has secured more than 75 licenses across major financial hubs, including Singapore, the UK, and the European Union. Analysts expect stablecoins to facilitate up to $4.2 trillion in global payments by 2030. If RLUSD captures even 3% of that institutional market, it represents a market cap of over $60 billion, a 40-fold increase from its current size. Legislative shifts, such as the passage of the Genius Act in the US, further cement these assets as recognized financial instruments, lowering the final hurdle for bank adoption. Ripple has positioned itself as an entrenched provider of global financial infrastructure, backed by a significant regulatory moat. Despite this growth, a clear tension exists regarding how these different assets interact. This distribution graphic shows a surprising split. Approximately 76% of RLUSD currently sits on the Ethereum network, while only 24% is on Ripple's own XRP Ledger. If institutions continue to favor a rival network for stablecoin liquidity, it raises the question of whether the native XRP token will remain a necessary part of the settlement process. Ripple's strategy relies on upcoming Layer 2 expansions and the growth of tokenized real-world assets to pull that institutional liquidity back to its native ledger. The outcome of that effort will determine if Ripple is remembered as a successful stablecoin issuer or as the foundational settlement layer for